Stavros Tousios for M4Markets. Today we're gonna start the week with gold and silver. I just wanted to turn the focus to the RSI here. You are actually seeing that we have had a move to the downside that came with a lower RSI, and currently what we do see is that prices are so far from the low. However, the RSI is very close to the previous low over here. That typically suggests that, the moment we do go below that low on the RSI, and we're going to be, of course, higher than that low over here, prices might start to see upside again. At the same time, though, and due to the structure of this move to the upside, if we did do more upside, it would probably start to look something like of a wedge, and wedges at higher points or at the top of a market, they typically suggest that there is going to be, if not a reversal, at least an actual correction. Now, all of this, of course, is based on what we see over here. We are currently above the 23. And this is the full leg to the upside, which means we still remain kind of biased to the upside. We have come down to the 38. We haven't lost the 50. So there is a lot of room to go, of course, to the downside. However, price action remains biased to the upside, especially since we can hold, and we are holding above the 1960, which is the previous top over here. Now, if we look at the 1 hour, we don't see again any signals over here. What we do see is the RSI might actually come to the oversold territory if we go a little bit lower down, kind of confirming this assumption that we might see a hidden bullish divergence forming over here that would supposedly lead to a little bit more of upside above the 2K. And it is important to recapture the 2K level if we want, of course, to see a little bit more upside. Now, when it comes to silver, we have come all the way up to around 23.50, and we received rejection because this is the base channel top trend line. Okay, and from here, we do see that we have actually a big divergence signal. Yeah, which then suggests that this is probably pressured to the downside rather than anything else. We are, of course, above the 23 of the full leg, okay, which is around the 23 as well. But in case we do lose it and then we fall below 22.74, that would probably encourage more short bets towards the 22, which is the 38 Fibonacci, perhaps even lower to the 50. Only when we lose 50 is sentiment going to change. But until then, there is no reason to change the medium-term bias, which remains to the upside. In the short term, as you can see, of course, because we have had this rejection, we'll have a nice signal on the RSI. The pressure is to the downside. Now, looking at the 1 hour, we see very similar signals here. You see two divergences, okay, popping, and actually even here as well. The thing is that once we go to oversold, they will probably have an actual hidden bullish divergence as well. So probably see something like this, and either we continue higher from here or we'll go lower. Okay, so apart from that, if we look at the shorter term Fibonacci, yeah, from the bottom over here, 22.67.68 is a level taken into account. Then the 22.14, which is actually both of them are swing highs and lows, so they are important levels. And then we go to the 50%, which is kind of a high activity level. And high activity levels typically are the ones that attract, they work as a magnet, attract both buyers and sellers.